Okay, everyone, welcome back. This is an early morning review of the stock market. We've got some big movement happening right now, so I want to get a video out and cover what we've seen. Leave me a thumbs up. Let's get right into it. All right, triple Qs. So we are heading down pretty impulsively. Nice rejection yesterday off of that descending trend line. So what I want to point out, and this is things to watch for, so here's your descending trend line that we had, and you'll notice what they did yesterday, and I'll explain how I traded that. But yesterday, right towards the end, you can see in the last half hour, they popped this thing up just briefly above the trend line to make it look like it was going to break out. But again, breakouts on the last half hour of the day, and this was not impulsive. It was just barely creeping up over here. So what I did is added to my triple Q short yesterday. And I did that because it was a not impulsive breakout in the last half hour. And then sure enough, by the end of the day, it had faded back below resistance, closing right there. So that told me that that was a pretty good entry or objective short, basically. And then today we get follow through. We get a big gap down and an impulsive sell-off. So a gap and crap is what they're called. But basically you gap down and you sell off impulsively. Now, that sets us up, I think, for a move down to about this 274 area. It's about 273.94. We have some reactions right in here. There's another trend line just slightly below it, but I think it's a range. And I'm going to say 274 is going to be some near-term support. Maybe from there we bounce back up into the trend line. We could even break the trend line, this descending trend line right here. But for now, I think that should hold as support. If that doesn't hold as support, then ultimately I think we're heading all the way down to this 264 area. And before you know it, it looks like we're already there. I had to pause the video for a second, turn on some Netflix for my kid. But we're already there, so this is probably support for the day. Probably the low for the day is right around this area. If we chop through here, then, obviously going lower. But I think we're at the lows probably in for the day. Volatility, here's UVXY moving up towards kind of my first target, 2350. I had pointed out in a couple videos that I liked volatility. It looked like we were breaking above this 1870. You can see what happened. We broke above it, came back tested it, and that's all she wrote. It's off to the races, going higher. So I'd expect volatility to run into this first resistance level up around 2344, and then turn around and probably reverse there, get a pullback, and we'll see at that point. We might work our way even higher up to the next level, which would be up around 2897. SPY right here, you can see we've broken through that first level that I had. I have the second level right here. Let's see if I can extend it out right there. So again, I think this is probably the support area where the buyers will be stepping in for today on SPY, and that's around 329.70. Let me make sure that's right. Around 329.70. Where does this bounce? Well, now we have a gap, so probably going to bounce up, fill the gap, maybe up around here. That's possible. And then, I think it'll probably continue lower at that point. Flipping back to Qs, same with Qs. We could bounce up and hit the trend line up here. And, you got kind of dual resistance now right here at this 280.50. So that might be the level where you get rejected up around that 280.50 and roll over. IWM clean breakdown, and it was actually forecasted yesterday. So the trend line right here at 159.60, you can see yesterday we broke down, back tested. They tried to give you a little whipsaw signal right here where they whipped it back above, but the hour still closed back below that 159.60 area. Sold off a little bit and held below resistance. Now we're getting the impulsive sell off. When you get these moves, it's not necessarily the time to short because a lot of the move was made in the gap down. You've got some support, probably right in there at this gap. We'll just draw that out right there. This might be a level of support. The other indices look like they're on support as well, so I would suspect that this one is going to be on support now as well. Bigger picture though on the IWM and small caps, if you go to the weekly, we're back within the range. So you can see this range right here. 159.60 is the high, and then 145.30. And we've had a couple false breakouts. Here's the false breakout, sold way down. Here's another false breakout, sold way down. Here's another false breakout. As of now, looks like we're heading back down to that 145, 30-ish area. Gold bullion continues to get rejected at this downtrend line right here. We're just walking lower and lower, so it's clearly downtrending. We're now breaking down back into the 1800 level. So I think we're heading down to 1790. And as you can see, we're not that far off now. I mean, from the high here, once we started to break down, it was a ways away. But now we're not too far away. So we continue to kind of work our way lower. I'm expecting us to, roll down, probably more impulsive at some point. It'll just impulsively run down. And then I'm expecting that to hold as kind of a longer term support. XLV, you can see here, nice impulsive breakdown today. To me, this tells me, if we get back down to this level, 101.06, and we break below there, then I think it's clearly going to head down towards about 97. So we're watching for that. XLF breaking down as well. XLF looks like it's just in this sideways kind of chop range. You can see if I take away this trend line, it's really just kind of moving within this range, oscillating. So, support on XLF probably down here at this gap, 2201. Apple just starting to crack support right here at 112.88. Watch for whipsaw signals. Watch for the buyers to step in and bid this back up. But looks like it's going to crack. We've got about a minute to go on this hour or so. So that one looks like it'll break support, and that sets us up for a move back down. Well, we've got a level here at 109.28, so that would probably be some support, and then potentially down at this 106.35. We've got some gaps as well in Apple way back here, so we want to watch for gap fills. I'll have to study the fangs a little bit better this afternoon, see what we got going on. But Microsoft reported earnings yesterday, and you can see what happened. We're right at support right here, just slightly under, but they did sell that into after the earnings. Amazon just slightly below support, 3208, so that should be resistance now. Here's here's Adobe. Here's that impulsive breakdown now of that support level. You can see here's your trend line. We've been walking up this trend line. Yesterday, we just dipped below it, came back, kind of back tested it, closed right on the trend line. They just kept you guessing basically for which way it was going to go. And today, impulsive gap down. So that sets us up for a move down. Now, obviously, you could back test, but back tests now are opportunities to establish or add to short positions. I see 423.50 as the next level of support. PayPal, we like this. I like this one when it broke down right up here at this 203.88. It's continued to move lower. As you can see, we bounced yesterday, but today gap down. So now support 197, resistance 197 should be about resistance. I'm looking for lower prices. Ultimately, I think this thing heads down. There's the gap down here on PayPal, this big gap. So I do think we're heading down to fill that gap. Gap fill is around 129.77. Gap entry is around 139.04. So expect reactions around those levels. Netflix still hanging in there. You can see the trend line right here, just kind of hanging in there. So I'm noticing kind of relative strength in some of these stay-at-home stocks. The market is behaving as if the pandemic's getting worse, basically, is what the headlines are. And so people are giving the stay-at-home stocks a little, a slight bid and selling the real economy stocks. That's what we're seeing today is the real economy and the stay-at-home stocks. But it's the small stay-at-home stocks. The FANGs are getting sold into pretty heavily as well. So it's just the little kind of high-flying companies. So we'll look at a couple of those. Philip Morris. I'm glad I cut this one the other day. I let everyone know that I cut that long position because I didn't like when it broke back down into this range below 73. A break back down into that range is a recapture of the major trading range. So this looks like it's proving to be another false breakout higher, and we're heading lower. So I cut that long position. Zoom, and here's an example. Zoom's, yeah, it's off a little bit today, but still way up there. It's not, hasn't really had this big sell-off yet. So we're continuing to just wait for the breakdown of this trend line around, whenever we get there. It's right now it's at about 470, and it's an ascending trend line. We continue to wait for that, but there's negative divergence on the daily. You can see it right here. So it tells me we're going to break. We just need to wait for that breakdown. Exxon Mobil here, if it turns up anytime soon, or if it can run down and just tag this trend line and then start to turn up, it will have a bullish divergence on the daily. So if we start to turn up anytime soon, that's a bullish, that would be a bullish daily chart. What I'd be looking for is probably, if we go to the hourly here, probably a break back above this gap. We'll probably do it 32.82. If we get a move back above the gap and can break above that and hold, then that would be a bullish sign, and this should continue up higher. So I'll just watch for that. This it's got a potential setup, but it's not fully formed yet, so I'm just kind of analyzing it. Need a little bit more to go, a little more information to call this one a little bit better. Pulte Homes. This is why technical analysis works, because it helps you analyze specific levels that everything trades off of, the algos and everything. So Pulte Homes. I've been talking about this one for quite a while. Really, if we look at the amount of time that I've really started to get interested in this one, it's about a little over a month. So you probably heard about it in every video for a month. But the trade just finally worked out. So here's your uptrend line on the daily chart, and we broke trend right here. Did a couple back tests of that trend line, but we were never able to recover that trend line. It was just testing from below, and then so those were opportunities to add to a short position, and then it impulsively broke down. I was targeting this gap. Here's this gap fill right here, and the gap fill was about 39.78. So I've been talking about that gap being my price target or profit target for the entire month, basically. And this morning I noticed we were going to open the day right around, $40, and that's close enough. Typically if you're that close to a level, especially right when you open, they might run down and tag it, or they might just start buying it up. It's close enough where that's the level, where you should, where I look to cover. I always step in early, especially when a gap is there. I always try to step in a little bit early. So I covered my trade right at the open today at $40. And if you see on the hourly here, you can see what happened. They basically, they just bid it right up. And so yeah, that's we're done with this trade. Moving on. That trade was a very profitable trade, but if you had from the high to the low, it was a move of about 20%. And even if you only took a position on the initial sell signal, which was really right about there, you still had a trade of about 11.5%. So good trade. Moving on. Okay, Carvana. Carvana looks weak, and here's the thing about Carvana. You've got support, which is now resistance actually at 201.42. It looks like yesterday they ramped it up, but today they gapped it down and sold it right back down. So it's back below resistance. That's a false breakout. Anytime you see something chopping around a level and then it breaks higher and then instantly recovers or instantly, falls back within that level, that's a bear trap, bull trap, this is a bull trap and a false breakout. So I think Carvana is heading lower, going down to fill this gap right down here at 174.22. The other thing about Carvana, and just to throw in a little bit of a fundamental, just a little bit of a fundamental view outside of the technicals. Technicals tell me we're going to fill this gap. Fundamentally, yeah, it's a stay-at-home stock, and so that's why this thing has kind of caught a bid, off the March lows. It's a stay-at-home stock. But I think we're probably getting into the point where it's not so much how people are going to be buying cars, whether they're buying them online or at a dealership. This is an online car dealer, essentially. I think we're coming to the fact that we're going to have less and less people buying cars. And that's because the longer this whole shutdown goes on, the more and more jobs you're going to see start to be lost. And when you lose your job, you don't go buy a car. So that's just some fundamental views. Oh, Intel. It continues to drop. And now this is pretty impulsive. You can see here just a straight down drop. And if you zoom out to the trend line that we have here on the weekly, this is going back to 2009. So your bull market. And you can see we're breaking down out of the bull market trend. So this is going into full-blown, what it looks like to me, full-blown bear market trend to the downside. I don't expect Intel to be the only semiconductor to do this. If Intel is going to go into a bear market, we need to watch for the other ones like NVIDIA and AMD to also probably start to show the same price action. Here's the McDonald's short I talked about the other day. I took this one. I got short right here on the breakdown. We had the kickback rally. I added to the short yesterday. And today we are breaking down some more. So heading down to what looks to be about 213.42 is kind of the nearest support that I could find. I just drew this trend line this morning. 213.42, I think, might get a reaction there because we had a couple reactions right in here around that level. And a little bit of a consolidation kind of chop range right there. So I think we're heading down to that 213, 42 area, 213, I could be off by pennies, 50, somewhere right around there. Maybe we'll get a reaction there. And then we have another bigger level down here, a bigger level of support at 202, about 203, which I think is probably where this thing's heading in the near term. And flipping back to the Qs here, you can see we're just slightly below, if I can zoom in, we're just slightly below this support level. But again, don't expect us just to fall right to the level. Usually they're going to undercut it a little bit, chop around. They got to fake people out. But I think it's going to hold this support right around here today. I don't know that, of course, but I think that's what it's going to do. I think we'll just chop around a little bit and then maybe eventually start to get a rally. So watching for that. I might even go long if it can actually, show some sort of strength. And that's all I got, guys. So thank you. Appreciate it.